about MSCI, really I do have many objections to the index construction and really what it's meant to signify. If it signifies the set of opportunities for EM investors, I really think it's not a good measure of that. I mean, the index is heavily concentrated, industry-wise, geographically wise, and what it does is express the emerging markets of the past rather than the opportunities of the future. The great way that China has, for example, is really representing of the amazing success of the last decades of China. Is that likely to be replicated decade after decade? No. So I think just that geographic concentration, industry sector, even stock concentration is a bad measure of the set of opportunities to EM investors, which is, I think, what an index is meant to represent. I take the example of healthcare. We have the portfolio close to a 9% position in healthcare. But that is a huge overweight. It's the largest overweight sectorially. And I don't consider having 9% on healthcare, considering the great number of opportunities in healthcare in emerging markets, the demographic, how the growth of this industry is in emerging markets, to be a big way. The problem is that the index is almost 1%. That is an example of an index that is not representing really to the potential opportunities, so the real set of investment, attractive set of investment opportunities in a market.
Yes, we do invest in off-benchmark securities. We have a rigorous investment process and we apply that to all securities regardless of whether they're on benchmark or off benchmark. And secondly, we really believe that some of the off-benchmark securities represent the future of the EM opportunity, whether they be off benchmark because they're smaller or just because they're less liquid, but they may present an exciting opportunity in terms of future EM growth. So for example, sometimes what is on benchmark does not represent to us the future of EM. In India, the IT services companies are quite a big benchmark weight, but we don't necessarily see that as a future. It's been a strong sector in the past, but it may not be the future of where India is going.
The benchmark is what we compare ourselves to, but that's not our entire universe, right? So if you don't own a certain company within the emerging market context, you know that effectively if that company does well, you're worse off on a relative basis. What we do is we consider all these companies all across the non-developed world, all these equities to be an entire universe per se. Irrespective of location, irrespective of geography or when the company is and fits our process, it is investable for us. And we've had hundreds of examples of companies and countries that are not in the benchmark that we've participated in.
So we like to think of ourselves as being benchmark agnostic. Whether the stock is in the benchmark or not, we put it through the same rigorous process. We are always looking for unique access to growth or a sustainable competitive advantage because those are the two characteristics that allow a company to weather the volatility of emerging markets.
And those can be in countries that will be Panama or Georgia, countries that have every characteristic that in our mind makes them emerging markets. They simply are not in the index. So that is one way in which we approach investing in non-benchmark securities. Another way could be investing in companies in a country like Brazil or Russia that are simply not captured by the index because of their size or whatever characteristics, but in our mind they represent the future sort of opportunities in emerging markets. Simply they are not sort of index components at this point.